So this brings us to the question, what drives prices? Because you're going to see a lot of traders look at technical analysis to try and predict where a price is going to go, or fundamental to predict where a price is going to go. But when you think about it, what really drives prices? Is it the fact that these technicals told us that something is going up, or the fundamentals told us that something is going up? Not really. What's going to drive prices is what we just saw. Orders. People sending an order to buy or people sending an order to sell. That's the only thing that's going to push prices in one direction or the other. Now, you can argue that, well, what's going to make somebody buy or sell is technical analysis or fundamental analysis. That's great. Okay, you can say that. But the idea is for us to understand that ultimately it's going to be the decision, the buying power of individuals, of people. So whenever we're looking at technicals or fundamentals or whatever it is, we're always thinking, how is that going to affect other people? So we're not actually using it because it's telling us if something is going up or if something is going down. We're using it to tell us what other people are seeing because we want to know what they're doing, right? That's ultimately all there is. We're trying to predict what other people are going to do before they do it so we can trade based on that. If we think everybody's going to buy tomorrow because whatever the reason, then we buy today, okay? And if we think everybody's going to be selling on that date, then we sell before that or we even short at that time, which we're going to talk about shorting later. So let's have an example. Let's say you're looking at a coin, okay? It's a liquid coin, meaning that it's not one of the most popular coins, not wildly traded, okay? Now, there's no news on this coin for a while, okay? Nothing's happening. Then a good news comes out. There's an upcoming event. So let's say they come out and they say, you know what? We're launching our mainnet in a month. And then they start releasing this good news about that event, right? So then what do you think is going to happen when they say that? Are prices going to go up right away, or are they going to go up when the event happens? Well, everybody knows that there's this event happening in a month, okay? That they're launching their mainnet. And they know that historically, this type of event have yielded a good upside from the moment it's announced. So people start buying right away, right? Because they're like, okay, well, this is coming out. This is a good news. It's going to push prices higher. So let's buy. So prices start to go up as soon as the news is out. And as the news is propagated and more people learn about it, and there's better sentiment about it, so people saying positive things about it, the more the price goes up. Now, what do you think when the event actually happens? What do you think is going to happen? Well, when the mainnet is launched, what is going to happen to the crypto price? Is it going to go up or down? Most likely, it's going to go down. Why? Because that's it. The event happened. There's nothing to look forward to. So what are people that have bought this cryptocurrency for this event are going to do? They're going to sell to either take their profit or even take their loss, but they're going to sell because the event happened. There's nothing more to do here, right? So they take their capital, their coins, they sell it, and they take their capital and they move to something else. So this is one of the things that boggles a lot of new traders. Is there's a very good news that happens on something or a good event, and the price plummets. And this can be seen in stocks all the time. And it's the same thing in crypto. The crypto plummets. And people are like, well, how does it plummet? That's great news. Well, it plummeted because people sold on the news. Because, okay, it happened, it's over. And this is why you always hear buy on rumor, sell on news, right? So what's going to drive prices is people's actions, okay? So whenever we're looking at something like this, an event or anything of the sort, you're always asking yourself, is this thing going to cause people to buy or sell? So if there's a news about an upcoming event that's coming in the future, well, you know what? This might make people buy because they know that there's an event coming up. So that's a good opportunity to buy because prices might be pushed higher by extra demand. Now, when the event happens, is that going to push more people to buy or sell? Okay, well, let's think about it. The event happened, it occurred. Is somebody else going to buy now or tomorrow? No, there's no more demand for it. Are people going to start selling? Well, let me think. The people who bought for this event, they now got to sell. Yeah, so you always every single scenario, you ask about supply and demand and what is not really the current, but the future supply and demand going to be because of this. And based on that, you can try and predict if it's going up or down. And this is why sentiment analysis is very important. Sentiment analysis is when you're looking at everybody who's, involved in this market and you're looking at the sentiment. Are they saying positive things about something or negative things? If they're saying positive things about a specific crypto, that means they're probably already invested. And when sentiment is very strong in one direction, so everybody has a very strong sentiment about, let's say, Ethereum, well, that means they're already all in Ethereum. And what's left to happen is that they're probably going to have to sell to get out of that position at one point. But there's not a lot of buyers left because everybody's so positive about this crypto. So they're already all in. So that tells you that there's no more buyers to buy, but there's a lot of sellers that are going to liquidate at one point. So even though the sentiment is very positive and everybody's saying good things about it, the probability that the price goes down is actually high because the sentiment is so strong, everybody's already in. There's no more extra demand to come in, but there's a lot of supply that's going to come in the future. So prices might go down. That's sentiment analysis. And this is why contrarian investing is popular. Contrarian investing is people who have this philosophy of trading against the herd. So if everybody's saying positive things about something, contrarian investors are going to be like, well, look, if they're all saying positive things about it, they've already purchased, and what's left to happen is for them to sell. So I'm going to do the opposite. If everybody's saying this is great, I'm going to bet that it's going down. If everybody's saying this is shit, I'm going to bet that it's going up, because if they're all saying that it's shit, they probably have no positions in it. And the moment that there's something good that happens on it, there's going to be a lot of potential demand that can come in. And there's no real supply, no sellers, because they're already not in it. So that's contrarian investing, where you're going to look at sentiment, what everybody's saying, and doing the opposite, which makes sense. Because remember, the thing that's going to drive prices is future supply and demand. So knowing the supply and demand of everybody, and then knowing how that is going to shift is very important for you to try and predict future prices. So that does it for what drives prices, and I'll see you guys in the next lecture.